Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
Wednesday, halfway through the trading week. Welcome to Modern Investing Techniques, episode 114. It's July 22nd, 2026, and I'm Patrick in Vancouver. Midweek, let's reassess this week's positions and look for fresh setups. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. Canadian TFSA holders eyeing energy exposure should note oil's pre-market lift as U.S. futures point to mixed open ahead of big tech earnings. The S&P 500 closed at 7,509, up 0.9%. The NASDAQ Composite closed at 25,837, up 1.3%. The TSX Composite closed at 35,369, up 1.2%. Sentiment remains pinned on corporate earnings, with more S&P 500 companies raising outlooks than cutting them. The Bank of Canada is holding rates steady absent major escalation on Iran, while the European Central Bank decision arrives Thursday. Energy leads intraday moves as oil rises ahead of the earnings wave. About 21 days ago, the show selected GIS on an earnings surprise entry. That position closed with a gain of 3.76%. The result illustrates how revenue beats can still deliver when sector rotation aligns with the move. Revenue strength alone proved sufficient in that instance. The outcome serves as a reminder that timing with broader flows matters. Our simulated portfolio sits at a cumulative profit of $266.87 across 42 trades. The matched window alpha versus the NASDAQ stands at positive 6.6%. Earnings breakout positioning targets companies raising forward guidance instead of just clearing the current quarter. The current environment favors names with sustained demand visibility into the second half, given the number of S&P 500 firms lifting outlooks. Screen using consensus revision data on Bloomberg Terminal or free alternatives like Yahoo Finance earnings calendars. Then cross-check against 20-day average volume to confirm institutional follow-through. This approach has worked best in the early to mid stages of earnings season when macro volatility stays moderate. The main risk is a sudden rotation out of growth into defensives if tariff headlines escalate. Size every position at 1 to 2% of the portfolio to limit single-name drawdown. Now we turn to today's practice investment update. This is a simulated trade for educational purposes only. No new position open today. Oil price strength ahead of big tech earnings creates potential sector rotation into energy. We are watching for energy names to hold above the 50-day moving average with volume above the 20-day average. Current pre-market action lacks that volume confirmation. Geopolitical headlines could reverse oil gains quickly. No entry occurs until the volume spike materializes. This pause shows how to define explicit trigger criteria rather than chasing headline moves. Listeners learn to name the exact data point required before committing capital. Yesterday's trade review finds no newly closed trades since the last review. The most recent practice investment remains open and pending scheduled evaluation. No new realized result appears today. The Nielsen IQ Analytics platform expands its Circle K agreement to deliver granular merchandising and pricing data across 12 or more countries. Canadian TFSA users can layer this data onto sector ETF screens on Wealthsimple or Questrade to identify rotation candidates earlier than headline reports. Access comes via enterprise subscription or through partnered research portals. The Vios open-source networking platform received validation from Hydro-Quebec on IPv6 and SRv6 architectures. Infrastructure investors gain a free lab environment to model next-generation utility network spend. Users can spin up instances locally to test how critical infrastructure upgrades might affect capital expenditure timelines for related TSX-listed names. Download directly from the VOS site at no cost for non-commercial use. Avante reported fiscal 2026 results. Revenue reached $37.2 million. That total marks a 10.3% year-over-year increase. Adjusted EBITDA arrived at $2.3 million. The EBITDA figure reflects 30% growth. Expansion in the NSSG segment drove the improvement. Recurring revenue rose 24% over the same period. Listeners can add Avante to a TFSA watch list for any pullback below recent support after the print. Naturgy lifted its full year 2026 outlook. The utility acted after posting robust first half results. Guidance revision followed strong performance across the first 6 months. Investors should review Naturgy exposure in global energy ETFs. The move positions the name ahead of the next earnings window. The outlook increase reflects sustained operational strength through the half. BTIG initiated coverage on Keel Infrastructure with a buy rating. Analysts pointed to power asset strength as the primary driver. The new coverage highlights the value of those assets. Investors can screen utilities sector ETFs for any rebalancing flows. Names with similar asset profiles may attract comparable attention. The initiation adds visibility to the infrastructure space. Foundry is polling Bitcoin miners on a BIP 110 proposal. The measure aims to reduce transaction data size. The mining pool is gathering customer input on the change. Crypto participants should cross-check any allocation against 2 independent price feeds. The step precedes any potential position adjustments. Verification helps confirm data integrity before acting. Our simulated portfolio across 42 trades shows a 55% win rate with 23 wins, 18 losses, and 1 break-even. Cumulative profit stands at $266.87. The matched window alpha versus the NASDAQ is positive 6.6% across 37 benchmarked trades. Average return per trade sits at 0.64%. The current streak is 2 losses. Our AI analysis continues learning from recent patterns and adjusting screens accordingly. Imagine you bought a covered call ETF last week when energy names lifted on oil strength. Your limit order filled at $42.18. Between the click and the fill, the bid-ask spread on that ETF widened from 3 cents to 14 cents in the first 25 minutes of the session. The mechanism at work is time value decay combined with liquidity withdrawal. The call you sold collected an 85-cent premium, but 60% of that premium is theta eroding daily once the stock stops moving. The Greeks update in real time. Delta on that call moved from 0.35 to 0.42 as the underlying ticked higher, changing your effective hedge ratio without any action on your part. Professionals always check open interest and the 20-day average volume on the option chain before placing the order. The biggest mistake with options is treating the quoted premium as guaranteed income without accounting for early assignment risk on dividends. Instead, always model the position at 3 volatility levels before entry. Before we wrap, open your brokerage screener tomorrow and filter for energy names with year-to-date revenue growth above 10% and 20-day average volume above 500,000 shares. That's it for today's Modern Investing Techniques. The resources page has links to everything we discussed. Subscribe and share with someone who wants to go beyond index funds. See you tomorrow. And if you'd rather watch than listen, find us on YouTube at NARA Network. Links in the show notes. Quick tip from the network. Try the Do Positive pod next. Good news in science and tech, plus 1 concrete action you can take. Every NARA Network show is free at naranetwork.com. And on the website, every episode's visuals live in our free image gallery at naranetwork.com/gallery. Royalty-free under Creative Commons, download with attribution. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the